Good afternoon. Time to have a look at what's happening from a markets perspective. We did see the tech stocks that are listed on the Asian side take a little bit of a beating, declining, mirroring some of the activity we saw overnight on Wall Street. So as a result, the likes of Alibaba down 5.3%, Tencent also down 2.3%. Mainland Chinese stocks were mixed. We're seeing a similar set of behavior, especially when we look at what's happening on the European side. European stocks lower. This is on the back of some of the hawkish comments that we have seen from the Fed. We had one of the Fed officials saying, and I quote, "The task of reducing inflation pressures is paramount." So as a result, we're seeing the German DAX down 1.5%, the FTSE down 0.25%, as well as the French CAC in negative territory down 1.6%. Oil seems to be heading a little bit higher. Again, it's the threat of looming sanctions to be imposed on Russia, possibly imposed on Russia. So as a result, we're seeing the price of oil trading at $107.89 a barrel. What we're going to be looking out for is those FOMC minutes in terms of clues about where the Fed's hiking policy is sitting. But in terms of what is happening in terms of market dynamics, we are joined by Chantal Marx from F&B Wealth and Investment. Chantal, thank you so much for your time. I mean, given the hawkish comments that we heard yesterday around the balance sheet reduction and also 50 basis points being an option, how is our local markets reacting to that?
Well, our local market isn't reacting well to it. Generally, equities respond quite negatively to hawkish monetary policy rhetoric. That would include any sort of talk around interest rate increases or a reduction in asset purchases. And we are seeing that coming through from the US at the moment. The implication is also that if they are more hawkish and they tighten monetary policy, the South African Reserve Bank will have to follow suit. So not only are we seeing a bit of negativity coming through, well, a lot of negativity coming through from the tech space, which is usually quite heavily impacted by talk like that. We are also seeing resources coming under pressure, and then also some SA Inc. stocks also coming under pressure today. Of course, none of this is helped on the JSE by the fact that a lot of big companies are trading ex-dividend today, which means if you are going to buy those shares today, you won't receive a dividend, and as a result, the share prices go down by the same amount as the dividend that's going to be paid out to investors in a few days' time.
So let's talk about MTN. Let's bring it locally for a bit. We've seen that share price recover somewhat after losing ground yesterday. And earlier this morning, they did release a statement saying that about 20 million MTN Nigeria subscribers are aimed at, of course, might be affected by the rules that have just been enforced by the Telecoms Authority. What do you make of the performance that we saw? 7% down yesterday. It's recovered somewhat, just over 3%.
Yes, the market doesn't like to be kept in the dark. And what we had yesterday was news that the Nigerian Communications Authority had said this, but no detail. So we didn't know if it involved voice and data, if it's only outgoing voice, what exactly the impact is going to be on MTN. So there was a lot of speculation out there, and we saw the share being sold off quite heavily. But thankfully, MTN came out with that SENS announcement this morning, just clarifying that it's only outgoing voice calls for clients that don't have their identity numbers linked to their SIM cards. That constitutes about roughly 27% of their clients, but if it's only voice calls, it will only impact revenue at a group level by about 3%, which is still substantial, but it hopefully won't be for the entire full year. So that impact is expected to be slightly smaller. And it may force people who have not registered their SIM cards or linked it to their identity numbers to actually go out and get it done. We know admin is a bit of a nightmare, and I'm sure that it's exactly the same in this case. And hopefully it will be a temporary issue rather than a long-term issue, and that is why we're seeing the positive share price reaction today.
The one share that has everyone talking, of course, is Twitter and the announcement by Elon Musk that he's obviously going to be on the board of Twitter after acquiring a stake. Let's hone in on the social media company for a bit. I mean, what's your thoughts when it comes to this particular company going forward, especially when we look at it from a valuation point of view? We did have their financials back in February. They didn't do particularly too well, but they did announce a $4 billion share buyback.
Yes, I mean, Twitter's been performing quite well of late. They've actually outperformed the rest of the social media sector. And we've seen a very strong rally after the news broke that Elon Musk is going to be involved. Not only did he buy a stake in Twitter, but he's also going to be on the board of directors. And I think the market, I think Elon Musk has a lot of fans out there and a lot of people very positive over some of the changes that he could bring to the social media platform. I think the edit button personally would be something that I would really enjoy, but I think that there are a few other tricks up his sleeve as well. The valuation has run ahead of itself though, especially when you look at it relative to other social media companies. I mean, I pulled up a quick screen from Twitter, and if you look at it on a price to earnings basis or a PE basis, it's now trading at a close to a 200% premium to the rest of the sector. Now, should Twitter be worth 200% more than the rest of the market just because Elon Musk is on its board? I think that's a question that we need to answer before making that investment decision. Personally, I think the share looks a little bit stretched, and I'd probably look for a different time and a different opportunity to get involved.
When you look at the FX markets, I mean, what do you think is driving it? Is it the talk of rate hikes, or is it now the conversation about the balance sheet reduction and the comments from the Fed?
So I think it's a combination of both, and probably still a lot of geopolitics involved there as well. It's very difficult to say what exactly is driving the foreign exchange market, or driving foreign exchange markets at the moment. But it does seem that in the absence of any sort of change in terms of geopolitics or the situation in Russia and the Ukraine, very little other news coming out currently. It does seem to be mostly Fed-based, and I think that going into the release of the minutes, it will probably remain so.
Chantal, let's leave it there. Thank you so much for your time. That is Chantal Marks from FNB Wealth and Investment, giving us her analysis on the latest market moves. Of course, we are waiting those FOMC minutes due later on.